In this presentation, we will continue to enter personal cash outflows from the bank statement into QuickBooks Outflows, which will include cash payments for the credit card payments, for college costs, and for the telephone. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are on the home page. We currently have the Open Windows open. You can open the Open Windows by selecting the View dropdown and go into the Open Windows list. We're now going to open up our check register by going to the Banking and Banking dropdown and then go into the Use Register, Banking, Use Register, and then we will have our checking account and OK. Now we've been entering data. We're going to go to the bank statement now. Bank statement, we're just entering data straight from the bank statement. We've entered our deposits. We've entered our checks up to this point. We're going to continue now with this check for the college payments. So this is a generic college payment. So my college, that's a generic college payment that we will be paying for the first start off here. Now college payments is another one that we may need to track for tax purposes. So we might want to think about, what's our tax preparer going to need for college tuition and what could be included possibly in college payments and what cannot. So typically, obviously, the tuition we might want to track. Then college costs, like maybe the bookstore, maybe that's something we put in the same account. So I'm going to put those two in the same account because I'm thinking that they might be something I can print one report out to give to the tax preparer. Now, other college costs like food at the college maybe, or housing might not be something that's taxable, tax deductible. And I'm not getting into whether something is or is not, but once we determine what we think might be deductible or not, we might want to think of our expense grouping in that format. In other words, rather than taking college tuition and then breaking out the book payments into some random account, including books, like if I just grouped everything with books, I might say, hey, the book payments might be something that I could try to at least ask my tax preparer if I could deduct them or get a credit for them or do something with them for taxes to help lower my taxes. And so maybe I'll group that with the college costs and print a report and ask about that rather than burying the book costs that are college related books in all of my other kind of books that I might buy, which are not going to be deductible clearly. So those are just some things to kind of think about. We're going to put these two in the same account, in other words. So we'll go back over here to QuickBooks. And this happened on January 12th. And this is going to be E for an electronic payment. And my college is the name of the college, which is a strange name for a college, but it's a generic name here, obviously. So we're going to say quick add and OK. And 900 is the amount. And we're just going to put this into the college. I'm going to call it college costs. So college costs and tab and set that up. It's going to be an expense type account. So we'll keep that and say save and close and enter. And that's what we need. Next item was the books. So I'm going to put that in the same account. So I'm going to close this. I'm going to right click, highlight. And then this is the bookstore. This is going to be the name of the bookstore. My bookstore, my college. So, okay, so that's going to be on the 12th as well. So 12E for electronic transfer. It's going to be bookstore, my college. Again, that's the name of the bookstore at the name of my college, bookstore, my college. Okay, quick add vendor, and that's going to be for $100 in books. Not too bad these days. So we're going to put that in the same area. And we put it under college costs. So we could just type in college costs and it'll start to populate for us. And there's those two. Let's see what else we got here. We have a credit card. Now credit cards are a bit messy. We'll get into more detail about how to deal with credit cards later. But right now we're just on a cash basis. So what we want to do is put this in the system so I can reconcile the bank account. But note that credit cards by their nature are accrual things because we bought something and we didn't pay for it. And especially if we don't pay off the entire credit card, then we're going to have an issue that we have an outstanding balance on the credit card that we have to record on the balance sheet. So credit cards for the personal accounts and business accounts are messy. They get messy, and so we got to think about how we're going to deal with it. So I'll just mention a couple different methods you could think about, and then we'll go in and we'll put it into the system, kind of using our middle method of complexity. One method you could use is you could just say, okay, whatever I pay on the credit card, that's what I'm going to put into the account, and I'm just going to call it credit card expense. And that doesn't give me any detail on what we actually paid on the credit card, and it doesn't allow me to really group those payments with the other categories like entertainment or Amazon or whatnot. So that method, but it does allow me to reconcile the bank account, enter this stuff into the bank account, and then if I have a question on what we paid with the credit card, we could go back to the credit card statement and look at the detail from the credit card statement. So that's one. Now, if you use the credit card a lot and it's significant, then you kind of want the data, of course, into your file. So that method will only give us the grouping of credit card. It doesn't give us the categories, which is what we kind of want. The next method is what we'll do here. We'll actually enter the credit card payment into the check register, and that'll allow us to enter the information into the register as we go. But we're not going to do it perfectly because we're not going to actually set up the third method, which would be to set up a credit card account and use the credit card register to enter the information into the credit card register, because doing that would give us the most detail and actually record the payments by date on the date they happened. So we'll discuss those methods a bit as we enter this information. We're going to choose the middle method for now and maybe go back to the credit cards and discuss options for them. To enter the credit card using this method, we'll need the credit card statement as well. So now we got the bank statement with the payment on it, and here's going to be the credit card statement. So if we look at the credit card statement, we could say, okay, here's the beginning balance was 0. We didn't owe anything on it. And then we had the additions, which in our case are just going to be these 3 items. So grocery store, gas station, it looks like, and Starbucks. So those are the 3 items we're going to add. And then payments 0, so the ending balance is just going to be our 3 items. This will be a simplified credit card because that's all we had. We had no beginning balance to carry over. In the next month, we'll show a beginning balance, so we'll get to see that. And you'll note that that what we have here is $385, and we only paid $100, I think it was. So we're going to have an outstanding balance, which complicates the credit cards. When we don't pay off the full balance, that makes it a bit more difficult to enter this information. So let's go back to QuickBooks and start to populate this. We're going to say that this happened, credit card payment on the 15th, and it's going to be E. And I'm just going to call it credit card. You might differentiate the cards, of course, by who American Express, Visa. You might want to put the last 4 digits of the number of the card or something like that, because if you have multiple cards that are Visa or something like that, that might be a way to differentiate them. So we're going to say tab and quick add, vendor, and then we're just going to have the credit card payment, which was only $100. Even though we spent the 300 something. Now note that you could, like if you don't have the credit card statement with you right now, create an account called credit card as a temporary, right? Credit card expense. I'm going to set that up real quick. Credit card tab, set it up and say, okay, and enter. And what that'll do, let's look at a report. If we go reports, and we go to company of financial profit and loss. We're going to change the dates up top from 01/01/20 to 12/31/20. So January through December 2020 is the year we're working on. And you'll see the credit card expense down here. Again, it doesn't tell you that much. All it says is the payment. And if we're only making the minimum payment, then it's not showing you really what we spent or credit on. So that's one way you could do it if you only have the bank statement and you want to push forward and reconcile. And then we could go back and go say, okay, let's go back here. Now I have the credit card statement here. So let's find that payment that we made right there, and let's add detail to it. So this is, one way we can work kind of in steps and say, okay, what I'm going to use now is the splits, and I'm going to adjust this and use the split item down here. And we're going to have more than one account. So this is the account that's going out of the credit card. And then I'm going to list the accounts that we made payments for on the credit card. So we made payments for on the credit card, Ralph's grocery store. Note as we go, the dates are a little bit off here in that this is the January credit card, which we would not pay until February, but we're actually paying it in January. So just keep that in mind. This should probably be the December credit card for the prior year, which we would now be paying in January. So as we enter this data, just keep that date overlap in mind. I'm going to break that out as just groceries. So I'm going to say groceries is going to be our new account. So whatever type of grocery store or anything I consider to be groceries, I'll put into this setup, this account. So it's going to be an expense type account. So I'll save and close. And we spent $310 on it. And then I'm going to put the name of the store here, which was Ralph's. And note the pros and cons of this method. One is that it's going to break out the accounts. So now we've added the accounts, we get to add to the proper accounts. The problems are that the Ralph's, for example, the vendor, we're not going to be able to see it in the vendor center. It's just a memo. The only vendor we're going to see are the credit cards. Also note that it's only here at the date of the payment, and we can't enter the information on the dates of the credit card amounts here, which again should probably be in December because we're paying it now. But just note that we should have the dates in terms of when they actually incurred on the credit card under an accrual system. That would be how we would do it. And we can only use the one date, the date we made the payment. But we're on a cash basis the way we're working it. So that might not be too bad under that method. So we might show that the next method, the next step up in more detail, would be kind of a two-step method. Enter the credit card expenses and increase the liability, and then enter the payment. So we can discuss that at a later time, but this is a nice middling method, which makes it easier for us to enter this directly into the check register from the bank statement, which is our cash basis method to do. So then we're going to go back to the next item, which is Chevron. So I'm going to make that account auto and then gas, and this is another one we could break out into different categories depending on how much we want to break out. We could put everything into auto, repairs and whatnot, or we could break out repairs somewhere different and try to track how much we spend on gas. I think a lot of people would want to break out how much they spend on gas. Might be useful to know. So we might want to have several auto accounts, one for maintenance, one for gas, and so on. Car washes possibly. So we're going to set up that account and then auto. And we paid for that 60. Now notice it says negative 210 because that's what we need to be in balance with this 100. So it's going to help us at the end. But right now we spent 60 for Chevron. And I'm going to type in the vendor, Chevron. And then the last one I believe was Starbucks. So we've got our coffee, Starbucks. Okay. Now with coffee, we might want to say a specific coffee shop. We might want to label it Starbucks and say we spend a lot of money at Starbucks. We might want to put that in there, or we might want to put general coffee shops. Maybe we go to a lot of different coffee shops and we just want to track how much money we spend on coffee or coffee shops, whatever we buy in the coffee shop, even if it's not coffee, I guess. But that's what we have. So we're going to say tab. So again, you may want to have one grouping or multiple groupings, or you could put this into the restaurant area or just meals and entertainment. Depends how much breaking out we want to have. So I'm going to set this up as coffee shops because I'd like to see how much we spend on the coffee shop. And that's going to be $15. And this is going to be Starbucks. Okay, so if I say tab, it gives us $285, which is the difference here. That's what we need to be in balance, meaning we only paid 100 and we owe the 310 plus the 60 plus the 15 minus the 100, the 285. So that's what our balance is going to be at the end of the day. That's our ending balance is going to be there. For that amount, we're going to have to create a liability account related to this credit card. So I'm going to call it credit card, and we'll put the same 4234 for that specific credit card, not a credit card expense, because this is going to have to be a liability. This is what we still owe. So I'll select tab, set that up, and it's going to be not an expense, but a liability. So we're going to go back down to, it's actually a credit card type liability. So we'll take that, and that'll be it, and save and close and record. You have charged the transaction. Do you want to record changes? Yes. Okay, and okay. So then we're going to go to our profit and loss, and now we'll see that we don't have just a credit card expense, but it broke out to the coffee shop, to where we wanted it to go, to the Chevron gas. And if we go to the balance sheet now, profit, we're going to reports, company, financial, and a balance sheet. And we change the date to 12/31/20. Then we're going to have our credit card that we owe still, and that's going to be, should match what's on our balance after the payment. So the 385 minus the 100 means we owe 285. So on our next credit card payment, it should have a beginning balance of 285 plus the charges. So again, that gets a little bit messy to do that on the credit cards, especially if we're not making the full payments. But this would be the way to do it as easy as possible and still get the actual detail from the statement in the records. The easier way to do it is just to record a credit card expense category, which doesn't record all the stuff that we bought on credit and didn't yet pay for, and it doesn't group out the categories well. And then the next level up in difficulty is to enter the liability first, so that we can track the vendors better and the dates of the transactions better. Back to the bank statement. I'm going to cross that one off. Found that one. The next one is Ease Childcare. So we'll go back to our statement, back to the checking account. And this one happened on the 17th. So we're going to say it's an E. And this is going to be for Ease Childcare. Tab, quick add. We're going to say that's a vendor. And we're going to say it's for $125. I'm going to make a new category called child care costs, and this might be something like a preschool or the child care. And again, this might be something that if we have a child care area that qualifies for like a tax deduction or a credit or something like that, we may want to break it out separately. So I'm going to break it out and assume that this is someone we're paying, possibly that could qualify for some type of tax benefit. So I'm going to say set up. It's going to be an expense and save and close. And the next one we have is going to be Jimmy No Name. Okay, so we're going to go back over here, and that's going to be on the 17th, and that's going to be E, electronic transfer, Jimmy No Name. And so we're going to say that that's for 200. And again, we might have some stuff on here that's just kind of random. Like it was a random cost that we had, and we don't know exactly what the best grouping of it for it would be. We could put it into miscellaneous then, or we could put it into, that thing Jimmy did for us or something like that. So we might want to group it out in some miscellaneous type category. So we're going to put that just into miscellaneous, and okay, set up the new account, save and close. Next item. Netflix. So I'm going to highlight that. So Netflix is obviously entertainment type of item. So we're going to say 23. E, I'm going to say Netflix. So kind of like cable TV and whatnot. And we're going to say that that's $20, probably a repetitive amount from month to month. And again, we could put it under entertainment. We could put it under like cable or TV or something like that. I'm going to actually name it Netflix, which again, I'm naming it by who we're paying, but it's a form of entertainment that I want to track individually. I want to know how much I pay specifically to the entertainment of Netflix. So I'm going to keep that as the name. Tab, set it up, okay, and enter. And then the next one we have is going to be the cable company. So I'm going to highlight that and say cable company, generic name, but that's who we pay, the cable company. And I'm going to say E and cable company. And this is going to be for $48. And again, we could, whatever we pay for cable, it might be that we pay for some other type of TV service, cable service, or possibly just internet connection or something like that with the cable company. So I'm just going to call it cable, and that'll be a generic kind of name. If we pay just for internet, maybe we want to break that out to just internet or something like that, or just cable. So we'll say set that up, new account, enter. And the next one's going to be Verizon. That's a phone company, so that's our phone bill. So we'll go back over here, and that happened on the 23rd. So we're going to say that's E for electronic. We're going to say Verizon, tab, quick add, set it up. That's for $83. And note, if I mess any of these up, we'll figure it out when we do the bank reconciliation. That's the point of the bank reconciliation. So if I miskey any of the amounts, I did that on purpose so that we could reconcile and find that. So this is going to be for the telephone. So the telephone and tab and setup, and that's going to be the telephone, straightforward on the telephone. And that's as far as we'll go for now. So I'm going to highlight that. And then we'll keep going on the next items next time. If we go back to our financials, we'll see that the balance sheet, if we go to the checking account, we're going to have our detail. If I change this front date from 01/01/20, then here's all the detail on the checking account. If we double click on any of these, we'll see the checks that we've been entering. Here's Netflix. So there's the check. Closing this out, closing this out. We see the credit card now. We had to put that in there to be more specific. We couldn't just be on a cash basis with the credit card, so we put that on there. And then if we go to the profit and loss, here's our categorizations for the profit and loss. Again, it looks a lot different than the business accounts because a lot of the things that are dealing with meals and entertainment, that's one grouping we might do for a business. That's our primary thing for the personal. It's going to have a lot of different types of entertainment and whatnot, and therefore we're breaking out some of those into specific categories that we may want to track to help with budgeting or to help with any number of things that are more personal related as opposed to just revenue generation related. For more accounting information and accounting courses, visit our website at accountinginstruction.info.